Hey guys, Justin with Ready Business Systems. Today I'm going to go over our pricing worksheet. So we're hoping to have a model of this that we're going to release to any company that wants it, which will help them establish their pricing. It's going to be part of our accounting package. So we're going to help you both get your books organized, create an annual budget for the year, and then also have weekly accountability calls to make sure you're staying on budget. So what this model does is it will help you figure out what you should be charging for your company, not what the other guys are charging, to make sure you make the profit that you plan on. It will be on a basis of your overhead per hour and your labor per hour plus your profit margin. So that's basically the equation. We're going to figure out your total overhead, get your overhead per hour, then we're going to get your labor cost per hour after you add on payroll taxes and other burdens onto the payroll, and then we're going to add on your profit margin. Beyond that, this will help you build your rate matrix to come up with your bidding system for your customers. So what we do here is this part of the spreadsheet, we're pulling in your overhead from your QuickBooks or your accounting software so we can get your total cost for the year. We have all the costs built in here. We take out the job supplies, the cost of goods sold, the labor, because we're going to address that in other parts. All we're talking about here is your just general overhead, which is going to be your payments to your trucks, because we like to build the payments in, even though they're not technically an expense, to make sure that you make profit cash flow wise. So all your expenses for the year, all your salaries, all your marketing, all your rent, all that stuff, meals, software, etc. At the very bottom right here, we have our total overhead for the year, which is $431,000. Overhead per hour, it comes out to $36 per hour. So basically, our total number of field hours that we are billing customers for, we divide this number by that, and we end up with $35 per hour. So obviously, the more hours you can bill, the lower this rate goes down. But in order to recover our overhead in this model, we want to charge $35 for every hour we work, plus the cost of the labor, in order to make sure that we break even on all of our costs, including our cash flow items for the year. So we're just talking about the field hours. So right here we have the field workers, the hours they work. We come up with roughly 10,000 hours for here. We're actually doing more, around like 12,000 hours for the year. Then over on this part, the unapplied hours, this figures out how much time is unbillable. So this is based on your estimate or your data you have from the amount of time that your employees are clocked into jobs versus not clocked into the jobs. So basically any time that they're driving or setting up for the day is going to be unbillable time. You need to know what that figure is, because you need to bid jobs higher in order to get your actual charge rate. Over here under labor cost, this is where we're going to figure out your actual cost for your labor. So everyone knows, obviously, you pay them an hourly rate. If they're on payroll, they're going to cost you more than this. So right here, you put your employees' wages. That helps you come up with your average wage per hour. You then put in all your taxes here that you pay. So your labor burden for us is about 17%. So for every dollar we pay, or every $100 we pay another $17 on top of that as our cost for the labor. So you need to build that into your costs as well. Down on this part, we figure out our average overtime, so we can make sure that we're including overtime into our charge rates. And after we do all this out, we ended up about our cost per hour is about $19.60. So for every hour we pay our guys, their average wage may be $16.36, but actually cost us $19.60 per every hour. So obviously, we're going to be paying them for time that they're not working at someone's house, which is why we need to upcharge to make the rate higher so that we end up at the right rate. So back over here, these charge rates, so this is where everything comes together. So our labor per hour was $19.60, like we just went through. Our overhead per hour, like we just went through. I'm not sure where that is. It's not supposed to be on here. And my accountant did that. But the unapplied hours, this is the unbillable time. Desired profit margin. Gives you your break even, the rate you need at the end of the day, and rate you need to bid on your job. So if you need to end up charging $60 per hour, unless, with the exception of doing big commercial properties where they clock in and clock out right on the job, there's going to be some drive time involved. So you're going to need to charge a higher rate on your jobs in order to end up at $60 per hour, which is what you need. So down here, it gives you a graph with benchmarks, tell you what you need to accomplish, how much you need to invoice a week, how much you need to invoice per month. It'll tell you the rate you should be bidding on the jobs for each service, and it'll tell you how much you need to be producing on a 10-hour day and an 8-hour day, etc. This weekly audit is something that my accountant does with my manager and something we're going to set up for you. So basically this will actually go through week by week, and it has a chart here for the year. So it'll tell you how many hours that you budgeted for when we built your budget at the beginning of the year. It'll tell you how many hours that you actually worked this year. So obviously we're way ahead budget and all the hours worked because we're producing more than we thought we were going to. And then this will live update to tell you where your profit's going to end up for the year based on these numbers. If you're having issues, if you're having a low charge rate, you can break down here to find out where the trouble crews are. So that's what this is. So I just wanted to go through that with you guys, give you an idea of how that works. But this general concept is very important right here. However you do it, whether you use we also have a free pricing worksheet, a really dumbed down version of this on our website. And this will help you calculate, you need to recover your overhead. You need to recover your hourly rate that you're paying your guys, obviously, and you need to make a profit there, and you need to recover your drive time. So however you do that. And just to show you one other thing, this spreadsheet, like I said, I'm going to make a better version for use with our clients, but we build this right into our rate matrix. Our charge rate comes right off of the spreadsheet. Everything's built in. This will tell you exactly what to put into your rate matrices for each service. So that's how this spreadsheet works. Any questions, post them below. Feel free to check out our website at readybusinesssystems.com. I will catch you guys next time.